The 2008 crash was the most severe economic and financial meltdown since the Great Depression. Millions of people lost their jobs, thousands of businesses declared bankruptcy, and the stock market crashed so badly that it was the largest point drop in history. Luckily for us, the economy recovered and we experienced the longest economic expansion in the history of the United States. The next financial crash was on the horizon, but the Fed did a good job of postponing it. However, it's already here. The economy is officially in a recession, and it seems like it's going to be long and painful. In order to figure out how to prepare for it, we have to understand a few things. What makes this recession different? Why the stock market is rising when dozens of millions lost their jobs? And what can we do to prevent it from sliding into a depression? Hi proactive thinkers, before we move on, a quick word from our sponsor Skillshare. Skillshare is an online learning community for creatives where millions come together to take the next step in their creative journey. Skillshare offers thousands of inspiring classes for creative and curious people on topics including illustration, design, photography, video, freelancing, and more. Most classes are under 60 minutes with short lessons, and each class has a class project to test your knowledge. This class on investing is so popular that 10,000 people have taken it already, including me. And it's taught by Business Casual, the YouTube channel you probably know. And all that is for less than $10 a month with annual subscription. But because you guys are awesome, the first 1,000 of you to click the link in the description will get a 2-month free trial of premium membership, so you can explore your creativity. And now let's get back to the video. A recession is when there is a decline in economic activity or negative economic growth for 2 consecutive quarters or 6 months. At the start of the year when COVID-19 hit the world, US GDP fell by 5%. Now, since we are done with half of the year, the National Bureau of Economic Research officially called it a recession. Many economists predict a double-digit decline, which we haven't experienced since the 1950s. And if the year ends with a double-digit negative growth, it's going to be a depression that can be compared to the Great Depression of 1929 that lasted 10 years. In 2008, the housing market crashed because banks provided mortgages to people who did not have strong enough credit scores. At some point, they defaulted on their loans, which resulted in a crisis that took down with it the rest of the economy. The government intervened and bailed out many companies, and out of sudden, the crisis was over in less than 2 years. But what makes this crisis different from all other crises we have ever experienced is that the modern economy depends on consumption to keep running. The virus suddenly stopped everything. Even if the government injects billions of dollars into the economy, the effects are going to be limited since businesses had to close down. What most people find strange is that why in the middle of this chaos, when GDP is hitting a record low, why on earth the stock market is rising? Shouldn't it be declining with the rest of the economy? The answer is simple: no. The stock market isn't the economy. Yes, of course, all these companies that are listed on the stock market are an essential part of the economy. Still, just because the economy is down doesn't mean the market should be down as well. And here is why. The stock market is determined by what investors think is going to happen in the future. The economy can be in a horrible position now. Millions can lose their jobs. But if investors believe that throwing their fortunes into the stock market will keep their fortunes safe, then the market will keep rising. Let's say you are the head of a hedge fund manager that manages $50 billion. Like everyone else, you realize that the economy isn't in a good shape. A logical option would be to liquidate your assets and invest somewhere else, or just hold on to your cash, right? But what if government says, no matter what happens, we are going to bail out these huge corporations as we did back in 2008? all out of sudden, investing in the stock market becomes risk-free, since someone out there with a printing press will print as much money as needed to prevent these companies from collapsing. Secondly, we already have a testable vaccine in the process. It's only a matter of time before the vaccine against this virus will be ready. It might take us another year, maybe two, but eventually we will get over it, and life will get back to normal, at least to a certain degree. So, future is safe. And thirdly, today tech companies make up the largest portion of the stock market. The top 4 US companies, each valued at over $1 trillion, are all tech companies: Alphabet, Amazon, Apple, and Microsoft. And the current pandemic isn't an obstacle for them. Amazon took advantage of it and rose even faster. Just because there is a pandemic in the streets doesn't mean people will use Google less. On the other hand, if you take the total valuation of all airlines, it will amount to around $50 billion, not even 1/10 of Microsoft. So if the entire industry disappears overnight, it won't make a huge difference in the stock market. What we're all waiting for is a vaccine. There is so much misinformation happening on the internet that it's difficult to find out when we're going to have one exactly. Unfortunately, not anytime soon. When the outbreak started, the world rushed to create a vaccine, and we beat the record and created a vaccine in 62 days, which is mind-blowing. But we cannot use it until it's proven successful. Typically, the researchers start testing the vaccine on animals. Once it proves to be safe after a wide range of testing on animals, we finally move to stage 2 and start testing it on humans. But before the public could use it, it must be tested on a large enough sample, people from different age groups, genders, races, and so on, to be confident that it's completely safe. If we end up making one mistake and some people will end up getting hurt as a result of the vaccine, that will scare off people and end in a distrust of medical professions. Let's say hypothetically we get it right by the end of the year. The third stage is to produce it in large quantities and distribute it. There are 7.8 billion of us on this planet. It's a logistical nightmare to produce so many vaccines at a high quality. It is going to take at least half a year, if not longer. On top of that, we must educate the world on how to use the vaccine, because each vaccine is different, so that will take some time as well. This means the crisis isn't going to end this year, and chances that GDP will be down by double digits is possible, and that means a depression. To restart the economy isn't going to be easy, but rather lengthy and painful. It doesn't matter if we're going into a recession or a depression. What everyone is concerned about is how to get out of it. There isn't a simple answer because every crisis is different, but there are few things we can do. One way to prevent the collapse of the economy is by pumping cash into the economy so that the economy keeps running even when everyone is locked down. And that's what the Fed has been doing since March. They aim to inject the economy with $2.6 trillion to keep it running. On top of that, the House of Representatives passed the $3 trillion HEROES Act. In theory, these gigantic stimulus checks should keep the economy running. However, in practice, their effects are minimal, and here is why. In any crisis, the first victims are small businesses. I'm talking about the little shop beside your house, the restaurant in the corner of the block, or the bakery in the neighboring building. Often, they go out of business even if they have to close down for a month or two. And the stimulus checks that people received are probably spent on Amazon and other gigantic corporations that had the infrastructure to keep working even during the pandemic. There is very little you can do on an individual level. What the economy ends up being is entirely based on the policies the government and the Fed will take to manage this crisis. But what you can do is take advantage of the circumstances. First of all, save, save, and save. In times of crises, we often should do the opposite, which is spend. However, since your actions on an individual level are very limited, if we end up in a depression, you might end up in a horrible position. It's better to be safe than sorry. Secondly, regardless if this is going to be a fast recovery like a V-shape that economists usually talk about, or long and painful, the fact remains that many businesses are going to go out of business. So being able to identify the trends and what industries are taking their place is key to building a fortune in an extremely short period of time. You might be able to achieve in a single year what it would take you otherwise in 5 years. If you guys have enjoyed this video, then make sure to give it a thumbs up, and if you want to support our channel, then check out Skillshare using the link in the description. Other than that, thanks guys for watching, and until next time.